Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. I'm going to make an assertion today for all the business owners that if you can get your accounting handled for your business for 1% of revenue, that is a steal. Now, I'm going to make a whole bunch of clarifications and even some caveats to that. And I promise in the end, I'm going to tie this back into retiring with peace, because ultimately that's what we're talking about. But I'm focused specifically on the accounting piece, partially, because I am a CPA and I have a lot of background with this from that angle, but also because I see far too many business owners messing this up. And it's really unnecessary. It winds up costing you more than what you would actually pay at a good accountant to get done. So I'm highlighting this, which I know is partially biased, self-serving, whatever you call it, because I do co-own an accounting firm, CPAs for Hire, with my partner, Dennis Fry. But I'm also coming from a place of seeing this for decades, both as a CPA and also as a financial planner. So when I make the statement that 1% of revenue is a steal to get all your accounting work done, we're talking more about small and medium-sized businesses. And that's not always going to be exact. You might be like really complex. So you might have some very specific needs for your business, or your business might be really fast growing, and therefore it's going to be more expensive than that. But if your company is really fast growing or complex, you need it, and it's going to be more benefit to you. Also, if you have a lower amount of revenue, or if you're just starting out, on a percentage basis, it's most likely going to be a little bit more expensive than that. But think in terms of, let's say you have a small business going well, you've got $500,000 of revenue, $500,000 of revenue per year. Paying a good accountant $5,000 to get the books done and clean, and even hopefully to get tax return prepared, all that stuff, for $5,000 for 1% of revenue, that's outstanding. Outstanding. And we're going to talk a little bit about why. At the same time, like I said, maybe if you're $200,000 of revenue, or if you're just starting out, it's going to be higher than that most likely, but still very well worth the investment. Even if you have $7 million and it's costing you 1% of revenue, that's $70,000, which sounds like a high dollar amount, but in terms of percentage of revenue, it's really not that much, especially for what you're getting out of it if you have somebody good that's keeping everything in good order. So that's the first caveat, is you have to find somebody good. There's good accountants, bad accountants, just like there's good and bad lawyers, good and bad doctors, good and bad financial planners, good and bad engineers. You have to still find somebody good that can keep this stuff in order for you and provide you some perspective on the business. They're not necessarily going to be able to help grow it for you, not in that role usually, but they're going to provide you some thoughts on margins and on cash flow and how efficient things are and how profitable they are. And that's really one of the key points that I want to make, is that if you're running a business, I'll go back to my $500,000 example. If you're running a business that has $500,000 of revenue, and you're saying, I can't afford to pay a good accountant 1% of revenue to handle everything, you have a business problem. I know people don't want to hear that, but you have a business problem if you're saying that you cannot afford that when you have $500,000 of revenue. And I'm not ranting here, I'm just stating that really as fact. If you don't have enough margin to pay for that, you need to look at other parts of the business and what's going on and why are margins so low that you cannot afford that. Now, the reason I'm saying all this and being very direct and emphatic about it is because I've seen so often where businesses will struggle when they don't have their records in good order and don't have that financial perspective. So there's two things I want to cover in terms of value and how this ties into retiring with peace. The first part is more of the ongoing operations while the business is operating. And then the second part is what happens when you're looking to sell the business and take that money and retire on it. So the first part is the operations. If your finances are not in good order, you're most likely going to be making bad decisions. And we've seen this quite often where a business might be going on and on and on, and then things seem like they're going fine, but they maybe don't understand the level of debt that they have or how cash flow is actually trending, and they wind up making a decision based on that bad information that sometimes can sink the business or put it in a hole for a long time that's tough to dig out of. We've seen this, unfortunately, too many times where people have come to us and say, I don't know, it seems like the business is good. I can't figure out why it feels like it's struggling. And then you start digging into it. It's like, oh, well, here it is. Here's why you have this debt, or here's the cash flow, or here's where the money's going. If you don't have all that in good order, you're making bad decisions. Well, they might be good decisions in the right context if you have the right information, but they wind up being bad decisions because you don't understand all the finances underneath. And that's really a huge risk when you're operating a business. You've got to know where you are financially. You have to have a clean balance sheet, which even a lot of accountants don't understand for some reason. But you have to have a clean balance sheet to know what that is. And once you have a clean balance sheet, then you can go look at your profit and loss statement and have a better understanding of that and your cash flow. If you have those in good order, operating on a regular basis and are getting good information, you can do so much better, not only in terms of profitability, but in terms of making good decisions for long-term growth. So there's that piece of ongoing operations that's important. Then we shift to what happens when we're done, we're looking to retire, we just want to sell the business and get a chunk of money that we can then use for our retirement. Well, I'll be direct on this again because I've seen this from the other end. So we've had clients who maybe they're looking to buy a business and they've sought our advice because we know the accounting as well as the financial planning. So we can look at a company and their financial statements and how they're doing and their history and their tax returns and all that stuff and advise them on some particulars about what might be good or what looks questionable. And there have just been so many times where I look at the financials and instantly it's like, no, something's not right. Because we've seen, I do this for public companies. I look at financials all the time. I go through earnings reports. And so I used to be an auditor, all this stuff. You can just look at a financial statement and either say, okay, this looks reasonable, or nope, that's a mess. And there's always a possibility of fraud, or they're giving you fraudulent financial statements. There's nothing you can really do about that. But if somebody's genuinely saying, here's our financials, and the accountant can look at them and go, no, something's not right here or here. You can pick out a lot of issues in the business or where something just isn't being accounted for properly or something's missing. And that's really important when you're trying to buy a business, because think about it in terms of buying a house. So if we find something in a business on their financial statements that is really off, just doesn't make any sense, I can't recommend that they then go buy the business. Just like if you were trying to buy a house and you found something that was really wrong in the inspection, say the foundation's a mess or there's a whole bunch of wiring that isn't any good, you wouldn't say, oh, well, we'll fix that. I'm sure the rest of the house is fine. No, You're not going to do that when you're buying a business either. You're not going to say, wow, the financial statements kind of look like a mess, but I'm sure the rest of the business is just well sorted out. No problem. No, that's not going to happen. So flip this around to the other side. You being the person trying to sell the business, if your stuff, if your books and records are not in order, the buyer should say, okay, what else isn't right? If your accounting isn't right and you're trying to sell a business, that's going to immediately decrease the value of what you're trying to sell. If a good accountant can come in and look at your financials and say, nope, this doesn't make sense, the buyer is going to be like, oh, I don't know. I don't know if I can pay that much, or I don't even know if I'm interested. It's going to weed a whole bunch of people out. So you really have to have that in good order. And when we go back to talking about, the cost of having the accountant and the whole idea of 1% of revenue is a great deal, it really is, especially if you're trying to sell the business. My goodness. The trick to that is, if you don't have good books and records and you're trying to sell, the accountant's probably going to cost more because they're going to have to come in and fix all the stuff that might not be right in the first place. So it's important to get good records and have those for good decisions while you're operating the business. But then absolutely, when you're trying to sell it, if the accounting is not in good order, it's going to be a struggle. And you might not get the valuation that you want. And in fact, a good accountant can help you even shape the business and understanding profitability and where the company needs to be for when you sell. So I know I'm being a little bit rough on business owners with this, but it's just so important when you're trying to get the most out of the business that you're operating, which is a hard thing to do in the first place. Make sure that you make the investment, and having an accountant that knows what they're doing can help guide you through this. So I look at the 1% as being a steal. Sometimes it might be 2%. It just depends on the complexity and size of the business. But I see a lot of businesses where maybe they're just operating in this $500,000, even to $1 million, but even up to a couple million or more. 1% is, I won't say it's nothing, but 1% is well worth having somebody keep everything clean and updated and give you good information for good decisions, and then setting you up to sell the business. It's so critical because I've just seen it happen so many times where either the business gets messed up in operations or just can't be sold, at least not for the valuation that people are wanting. And so often it happens to be around just not keeping things in good order administratively and with accounting and accounting records and different tax filings. Make sure you keep all that in order. If you're operating a business, you're going to get so much more out of it in the long term.